Good morning to all. My name is Carlos Baca, Vice President of Investor Relations at Fortuna. I want to thank you all for being here today with us. I'm very happy to be back this year. Before I begin, I want to indicate that we will be releasing our 2024 production results and our 2025 production and cost guidance this week. So some of the information I'll be presenting is dated as of Q3. Our shares trade in the New York Stock Exchange under the ticker FSM. We trade around 8 million shares per day. And in the Toronto Stock Exchange under the ticker FVI, where we trade around 1 million shares per day. I'll be making some forward-looking statements, so I please invite you to go to our website and download our corporate presentation. This year, we commemorate our 20th year anniversary, and I'm very proud to present this slide as I joined the company back in 2007. In 2005, we acquired the Caylloma mine located in Peru, and we reinitiated production in the last quarter of 2006. Last week, we announced the sale of our San Jose mine, which depleted its reserves last year, and it has become a non-core asset. So that deal is expected to close at the end of the month. Our San Jose mine, at the peak of its production, was ranked for several years as a top 15 primary silver producer. So it's been a very important asset for Fortuna that has generated and created a lot of value for our shareholders and the stakeholders, our different stakeholders. In 2016, we acquired the Lindero project in Argentina, located in Salta, in the province of Salta, and we built it through COVID and poured first gold in the last quarter of 2020. In 2021, we acquired Roxgold, which was a Canadian-listed company that had assets in West Africa, in Burkina Faso and Cote d'Ivoire. Hence, Fortuna's presence was extended to West Africa with a producing mine, the Yeromoko mine, which has life of mine good until mid-2026. And the Séguéla project, which was a pre-feasibility stage project, which we built on time and on budget, and we poured first gold in May of 2023. Séguéla has become our flagship asset. It's our cash cow, and we'll talk a little bit more about Séguéla in the upcoming slides. Last September also, we acquired Chesser Resources, an Australian-listed company, and with that, we expanded our presence into Senegal with the Diamba Sud Gold Project. We expect to be producing resources which will be unveiled in the end of February, early March of this year. So this is the guidance we produced for last year. Deliver around 457 to 497,000 ounces of gold equivalent, which breaks down into around 350,000 ounces of gold and 4 million ounces of silver, plus base metal credits out of our Caylloma mine in Peru, at an all-in sustaining cost of between $1,485 and $1,640. I think the company is undervalued, as you can see on a EV to EBITDA basis and on a P2 cash flow basis. We find the company to be undervalued. Hence, there's an opportunity for a re-rate as the markets recompose and we start seeing the spread between gold prices and equities reduce, right? This is our 9-month consolidated production. We've delivered 273,000 ounces of gold, plus 2.9 million ounces of silver, plus base metal credits out of Caylloma. These are our financial highlights. We have a strong balance sheet. We are debt-free. We're net cash positive. As of the end of Q3, our liquidity was north of $430 million, so we're very well positioned to capture opportunities that might present to us to keep growing our portfolio. We've also, in the last quarter of 2024, we executed 41.8% of our share buyback program, we acquired around $35 million worth of stock. Our Seguela mine delivered 102,000 ounces of gold as of the end of September at an all-in sustaining cost of $1,073. Very competitive cost with respect to what we're seeing in the gold price, right? Excellent margins. We've also allotted $14.7 million into the exploration programs at Seguela. This map illustrates the prospectivity of our land package. In blue, you see the deposits that make up the reserves and resources at Seguela. And in red are advanced exploration ideas that could potentially we could potentially add to our resource base and hence to our life of mine. Yaramoko, our 9-month production sits at around 86,000 ounces at an all-in sustaining cost of $1,379. We've also allotted around $7.1 million into brownfields exploration. Lindero, located in Argentina, has delivered, as of the end of Q3, 70,000 ounces of gold at an all-in sustaining cost of $1,800. That all-in sustaining cost is being impacted by a one-time event, the expansion of our leach pad, which is $51 million CapEx. So we're practically complete with that project. We are carrying around $6-7 million into this year. So this will allow the company to place ore for the next 10 years. The life of mine at Lindero is 11, so this project will definitely have an important impact in the operation. Our Caylloma mine, a steady performer, has delivered around 927,000 ounces of silver. The guidance for the year sits at around 1 million, so it's very well positioned to exceed that our guidance at an all-in sustaining cost of $19. Life of mine of 5 years. The mine of life I've been referencing is based on reserves. San Jose, as I've indicated, is in the process of being sold, but it has delivered, as of the end of Q3, almost 2 million ounces of silver plus 13,000 ounces of gold at an all-in sustaining cost of $27. Mentioned that we acquired Chesser Resources, and with that, the Diamba Sud. We're located in a very prospective neighborhood. As you can see there, you have important mines out of VRIC and other important senior companies that are around the area. So hopefully, Diamba Sud will prove, and we can potentially think at some point of producing a feasibility study and hopefully building a mine. But for that, we have to keep drilling, and please follow our news flow, and you should see how we advance our exploration work. We've allotted $9.9 million into the brownfields exploration program last year. So in general, we spent last year around $45 million in brownfields exploration and greenfields. And this year, we should expect a similar amount. No, everything will be revealed in the upcoming days. We're very well rated by ESG agencies. We're constantly improving our ESG risk profile. We have 306 million shares outstanding. 58% of our ownership is institutional, 1% management, and the balance is retail and small institutions that don't necessarily reveal their positions. Our ownership is basically in North America. Thank you very much. And if you have any questions, we have our booth. You're more than welcome to visit us. Have an excellent day.